So let's talk about tipped employees. Because I said they've kind of got some nuances. Tipped employees have some nuances to them. So what is a tipped employee? So this is somebody who customarily and regularly, so both of those, it's a customary in the industry and it's regular, that they receive more than $30 a month in tips. So that covers a lot of people, really. What happens with tipped employees is that the minimum wage that the employer has to pay is different. It's lower. It's $2.13 an hour instead of $7.25 an hour. Now, the employee is still required to make at least $7.25 an hour, but the employer is only required to pay $2.13 an hour or enough to get the employee up to $7.25 an hour. So the rest of it comes from tips. So essentially, the employee is still making $7.25 an hour, but it's coming from two different sources. Part of it's coming from the employer, part of it's coming from tips. So they still employ. So if we're thinking of 40 hours a week, tipped employees still have to make this $290 a week if they're working 40 hours a week. But like I said, it comes from two different sources. Each state may have different rules as well. So Iowa actually does have a higher minimum wage for tipped employees. Iowa's minimum wage for tipped employees is $4.35 an hour. But at the federal level, it's $2.13 an hour. So the employee has to make at least $7.25 an hour when you combine those tips and those wages. So you can kind of think of tipping as the customer is subsidizing the wages of those tipped employees. For a lot of tipped employees, well, I don't know if it's a lot. I don't really know what the statistics are on how much tipped employees are actually making. But for tipped employees, they are their wages are getting subsidized by the customer. So the employer doesn't have to pay that full $7.25 an hour as long as the employee is receiving tips that come to at least $5.12 an hour. So let's look at this. So let me erase this. So wage, so this is what the employer pays. $2.13 an hour. The rest of it is made up by what we call a tip credit. So you saw that terminology a little bit earlier in the slides. The tip credit is $5.12 an hour for a total, magically, of the two of $7.25 an hour. Again, the employee has to receive at least the $7.25 an hour, but it comes from two different sources. The employer, now this is the minimum amount that the employer has to pay. So even if the employee makes enough tips so that their tips come out to $300 an hour, the employer still has to pay $2.13 an hour. The employer always has to pay at least $2.13 an hour. But if the tips do not, once we do the math of how many hours have been worked, if the tips do not come up to $5.12 an hour, say they worked 40 hours and they made $40 in tips, that's $1 an hour in tips, that means the employer is going to have to make up the difference. So they're going to have to pay more than $2.13 an hour. Okay. A good way to look at this is, how I like to do it anyway, is I like to do the calculation as though there were no tips. So calculate how much the employee should be paid just at $7.25 an hour. So if they worked 40 hours, they made $7.25 an hour, they'd be paid $290 for the week. Then calculate how much they're making from the employer, add the tips, and then add that together and compare the two. I'll do an example up here on the board. So let's just say we've got an employee who worked, we'll keep it simple right now, 40 hours times 725. They should make, at a minimum, in order to meet that minimum wage requirement, $290 for the week. They made tips, 40 hours, and then they've got tips on top of that of, let's say, I'm going to put this over here actually, $300. We add these two together, so 213 times 40 is 8520, I believe. Whoops, times 8520. So they made $385.20 for the week. Compare $385.20 to $290. They made enough. They made more than enough, right? They met that $290 threshold. Now, if they didn't, though, let's say that their tips were, well, let's say they were $200 for the week. So now they made $285.20. They needed to make at least $290. That means the employer has to make up the difference. So now the employer, instead of paying $85.20 minus $285.20, which is an additional, what, $4.80? So this is an additional pay, employer pay. $4.80 to get them up to $290. So the employer is going to, instead of paying the $85.20, they're going to have to pay $90 to make sure that that employee gets up to the $290 for the week so that they are in compliance with the minimum wage law.
Is that why some employers tip share?
So the tip sharing is kind of a different, they still have to do it even if there's tip sharing. They still have to, even if there's tip sharing, each employee has to make at least the minimum wage. Okay, so that doesn't really get around that requirement. The tip sharing is more of a, I think if it's, places like the Chipotle and stuff like that, where it's really, you're not having one person serve you. Everybody's kind of working as a team. Or I know there's some restaurants that tip share as well. That, by the way, all employees have to agree to that. You can't just mandate tip sharing. The employees do have to be in agreement and understand that they're sharing in those tips. I don't know how they would do it any differently at some of the fast, fresh places, but your mandatory minimum is $290 if they worked 40 hours during the week. Now, if they worked some other number of hours, that amount would be different. So if they worked 30 hours, let's say they worked 30, then they'd have to make at least $217.50 during the week. So in that case, let's just say it was, 30 hours. Let's see if the employer paid enough. Well, yeah, they would have paid enough. They still have to pay the $213. So now it's $63.90. Made $200 in tips. So now they made $263.90. But the minimum that they needed to pay was the $217.50. They're fine. They're not going to have to pay any extra in this case. The employer won't have to pay any extra to the employee because the employee made at least $7.25 an hour. So the number of hours worked matters. The amount of tips matter as to whether or not that that minimum is going to change based on how many hours are worked, but it's always going to be based on $7.25 an hour, unless you're in a jurisdiction that has a higher tip rate, right? Unless you're a higher minimum wage. So this gets a little bit more into the weeds, and we're going to talk more about this on Thursday, but the tip credit remains the same even in the overtime pay calculation. So if we look at overtime, so $7.25 an hour times 1.5, this is our overtime, this is our regular rate, is $10.88 an hour. This is our overtime rate if you're making minimum wage. Now, if you're making some other amount, that's not going to be your overtime rate, right? If you're making, say, $10 an hour times 1.5, now your overtime rate is $15 an hour. This is for hours worked over 40. We're going to go into more detail about this, but I just want to kind of give an overview of this, what they're talking about here. That tip credit is the same of $5.12. So that means that the employer is going to have, if the employee works in overtime during the week, the employer is going to have to pay more than that $2.13 an hour for the overtime hours. What they're actually going to have to pay, so $10.88 is the full amount, minus the tip credit of $5.12. So this is the overtime that the employer has to pay. We're going to go through some more calculations of this. So don't get too, I mention it because it's on the slides. I think they put this in the wrong place. I think they put it too early in here. I don't even know if I want to go to this example. Now I'm going to skip that example because I want to do that next week. Here's an example of tips. So the first one, the individual has tips of $43. They worked 40 hours during the week. So the employer has to pay the $85.20, regardless of how much they made in tips, $2.13 an hour. Add that to the $43. That doesn't come anywhere near $290, does it? So they've got, in this case, the employer is going to have to pay additional wages of $247. Well, their total wages that they're going to have to pay is $247 to the employee, because the employee only made $43 in tips. They worked 40 hours. They need to make at least $290. The rest of that is going to have to come from the employer. Does that make sense? So in this example, the employee did not make enough in tips to cover the entire tip credit. So the employer has to make up the difference. In the second example, we've got somebody who made $1,189 in tips. Well, that's way over $290 for the week, right? If they worked 40 hours, they're fine. The employer is not going to have to make up any additional, but they still have to pay them $85.20. The employer still has to pay at least that amount, even though the employee made $1,189 in tips. Okay. Because that's the minimum wage for tipped employees. So the employer is always going to have to pay the minimum wage for tipped employees of $2.13 an hour. Yep, always. Yep, because they're an employee. So they're always going to have to make at least $2.13 an hour, or whatever the tip minimum wage is. So like in Iowa, it'll have to be $4.35 an hour that they have to make, regardless of how much they made in tips. That's just the employer's responsibility. That's for the privilege of having an employee. They've got to pay the employee that amount per hour. What we're concerned with is, did the employee make at least the minimum wage for each hour that they worked during the week? in this case, when we combine what the minimum that the employer has to pay with the amount of tips, did they make at least the minimum amount that they have to be paid for the week? In the first scenario, they didn't. And that means that the employer has to make up the difference. In the second scenario, they did. They made more than enough. That's fine. But the employer they don't have to make up any difference, but they still have to pay at least the $85.20 an hour. Does that help? So, always going to have to pay at least the $2.13 an hour. Even if they made $12,000 in tips. I don't know what that job is, but if you find it, let me know. I'd be happy to work way harder. So service charges. So these are things that they're imposed on the customer. It's just automatic. You're ordering room service and they have a service charge, an 18% room charge or something like service charge, and then you can tip on top of that. That service charge is not considered a tip. And so the employer cannot use that as part of the tip credit. So it's considered to be wages, just like, because it's mandatory. A tip is supposed to be voluntary. Whether it's voluntary or not these days is up for debate, but it's supposed to be a voluntary thing. Let's see, I don't need to talk about that. Okay, so what happens if an employee is working in a couple of different jobs? So you work at a restaurant and sometimes you're the host or hostess and sometimes you're a server. That tip credit only applies to those jobs that are normally tipped jobs. So a host usually isn't a tipped job, right? So that tip credit can only be used against the hours worked as a server. Okay, so if it's 20 hours as a host, 20 hours, and you're making $7.25 as a host, you're making $2.13 as a server. So those the employer has to use the two different rates. They only get to use that tip credit against the work as a server. Let's see here. I think I went through this. Hold on just a second. I did. Okay, well, I think this is only a couple of slides. This is just saying the same stuff. Again, $30 a month in tips regularly, and it's customary, then you're considered to be a tipped employee. The employer can pay you that tip wage rate. It does apply on an individual basis, so each individual employee is looked at as far as what they make per tip. So you can't average everybody's tips out over the course of the month or the months. If there's anything new here that I need to say. So the employee has to be informed of the tip credit. They have to be aware that that's how that works. Employer has to keep proper documentation on the tips. And I know cash can be a bit of an issue. Cash tips can obviously be a bit of an issue for employers to keep track of. You're relying on the honesty of the employees with the cash tips. The tips also, in order to get the tip credit, the tips have to be retained by the employee. So you can't share them unless it's a valid tip pooling arrangement. So you had asked about the tip pooling. The employees have to all agree. And I don't know exactly what goes into a valid tip pooling arrangement, but the employees have to all agree to that tip pooling arrangement. Otherwise, if it's like mandated by the management that everybody has to put it in and people didn't agree on it, then the employer isn't entitled to a tip credit. They have to pay them the $7.25 an hour. Let's see.